All right. Hello, everybody. Welcome back to the show. We are here on Sunday, December 1st. We're here, folks. December is here. Last month of 2024 on the Sunday Futures Show. Hopefully, everyone had a great Thanksgiving, a fun Black Friday. It's time to get back to work. It's time to get back to work. Thank you, everybody, for being here. We're going to get started in just a bit. We got a lot of headlines to run through before we prepare for the upcoming week, which is going to be one of the last 4 weeks we have of trading in 2024. Again, crazy to say that, but that is indeed happening. And yeah, while we get ready to start the show, how was your guys' Thanksgiving? How was your guys' Black Friday? Did you guys buy any things? I did buy this new hat you guys can see right here. People act like I don't know about basketball, bro. I don't follow basketball as much anymore, but like the Bulls and the Suns 1993 NBA Finals, like there's still a lot of basketball in me, even if I don't follow it like I follow stocks every day. But yeah, how was your guys' Thanksgiving? What'd you do? Did you go Black Friday shopping? Did you spend time with your families? Let's see what you guys have to say for the next couple minutes. And then we're going to get into a bunch of headlines. We got Tesla, FSD13 is rolling out, and that is why the stock probably popped on Friday, or I think it was, Friday after hours. We had an early closing, but that stock pop at right like last 3 minutes before after hours closed, or before after hours closed. It seems like it's because people knew FSD13 was coming out, and it is coming out. And in 13 minutes, we'll get the Robinhood overnight markets opening, and we'll see kind of what happens there. XRP is mooning. We'll talk about XRP. Steve cannot be happier right now, most likely, so we'll talk about that. We'll talk about Bitcoin trying to get to 100K. We do have some news headlines around Bitcoin. And then I want to preview going into December. What has happened so far going into the year in terms of best performing stocks, assets, etc. And then historically, kind of what can we expect going into December? The S&P 500 did close at an all-time high on Friday, and we'll do a preview of that going into this next week. All right. Thank you, everybody, for being here. Oh, and Palantir. We do have to talk about Palantir. There's some updates. There's always updates on Palantir, but there is a specific update I want to talk about, so we'll be talking about Palantir as well. All right. Thank you, everybody, for being here. Let's see how your guys' Thanksgiving was. Digger says Steve is my hero. Well, if you guys bought XRP when Steve said it at like 70 cents, I think, then I'm sure he's your hero. Peter says, I heard you talking about XRP, so I put 5,000 on it yesterday. I'm up 1,500. See, this is some bull market type of shit that happens. You put 5,000 in something and then you're up 1,500. I mean, I have $150 in XRP. I'm up $90. I asked on Twitter, hey, should I I was up 75 when I posted the tweet. Now I'm up $90 since XRP is up 20%, 20% further. I asked, should I just go cash out and take the dinner, or should I hold on to it? I'm holding on to it, but there's a lot of XRP haters in the chat, bro, or in the comments. In the comments on Twitter, they're just like, dude, it's a scam. It's pumping for no reason. It's going to sell off, yada, yada, yada. I'm not saying I agree or disagree. I'm just saying $75 would be nice to go get some dinner. But if this thing goes to $5, I'm not going to hear the end of it from Steve. So maybe I hold on to it just in case. Viet Esical, sorry if I'm saying your name wrong. Hi, Amit. Hi to you. Thank you for being here. Ori, good morning from Tel Aviv. Ori, what's up? Thank you for being here. RC said, I watched y'all last night. Awesome. We had a good dividend episode. Hopefully people enjoyed it, and we got some good fixed income analysis from Steve. Melanie, thank you for being here. Good evening to you. Sean, what's up? Says, I'm holding. Afton, what's up? Laura, hello. Bay Ray, I have the same Palantir crew neck. I love it. We got the Palantir crew necks. There we go. Edgar says, I worked all week, but had a great Thanksgiving meal at home. All right, that's awesome. My Thanksgiving was pretty simple as well. Had my uncle come over. So it was my uncle and my mom, my dad, my sister. Pretty simple. Nothing too crazy. Just had some food, and then I slept. I slept so much that I woke up late on Friday for the market open. But outside of that, pretty much it. Canada Thanksgiving was last month. Yeah, that's fair. It's really only an American thing, to be honest, in November. The rest of the world doesn't celebrate it as much. Walter, hi from Chile. Walter, what's up? Thank you for being here. All right, let's get started. Let's get into it. So I mean, let's quickly do the XRP thing. I mean, look, I don't have an opinion on this. I don't really care about this at all. It's up 25%. I'm going to be honest, dude. I don't really believe in this as a idea in and of itself. I mean, look, it's about to flip Solana. Oh, it's already flipped Solana. So XRP is now a $132 billion market cap. Solana is a $112 billion market cap. I could be totally wrong about XRP. Again, I'm very undereducated about this, but Solana to me has a lot more use cases from the little I know about Solana than XRP. Again, I could be totally off on this, but I have a lot of friends who are into Solana, a lot of people building apps on Solana. All these meme coins you're seeing on Solana, you might not think meme coins have utility, but they are using Solana for something with that. XRP is kind of that international currency. One day could be the new reserve currency that the BRICS system uses. Maybe, maybe not. I just think at $135 billion market cap, you got people on Twitter saying that this thing is going to 7 trillion. So it's, like it's going not just 10x, it's going 70x. And it's like, maybe that's going to happen. Maybe that doesn't. I kind of feel a little scared that XRP is running up like this. Either there's a bullish and bearish scenario. The bearish scenario is that this is altcoin pumping nonsense and it'll get sold off just like it has got sold off many times before. The bull case is, wait a second, Bitcoin dominance is becoming so strong that some money is leaving and going into all these other assets, XRP right here at 240. And because it's going into these other assets, then that just means there's more momentum with crypto as an ecosystem as a whole. Now, to kind of go not bearish or not bullish, but kind of be neutral, I think you have to be rather fair of the idea that the next 4 years are going to be very pro-crypto. We're going to talk about some more updates with the Trump administration and people he's selected to lead the crypto parts of the administration. But it's hard to imagine that a digital assets ecosystem over the next 4 years doesn't have a tailwind that is the United States government supporting it in and of itself. Even if they're just supporting Bitcoin, the derivative effect of supporting Bitcoin is all these other assets get momentum. So that could be bullish. At the same time, this could also be pumping for no reason right now, and it could sell off and then come back to these levels. This is where you got to believe in the asset or not when you're going to hold on to it. But I do think there is a multi-year tailwind for cryptocurrencies. I don't know if XRP is the winner in that tailwind, but they could be. And if they are, then people holding on to XRP are probably going to be happy over the next few years. I'm just happy, as Custard and Chip says right here for Hood, I'm just happy Hood listed it. Like the fact that I could buy it on Hood on Thursday night. And you know why I bought it? I bought it because I was on the phone with Steve and he kept saying Ripple. I'm like, you know what, dude, I'm buying it. I'm buying. I put $150 and I'm like, now you can't tell me I don't own this thing. And it's up $90. So now it's just like I'm holding on to it. But the good thing is I was able to buy it on Robinhood. I didn't have to go to Coinbase or anything crazy. And I think Robinhood is going to get some juicy revenues from this, along with the other crypto assets. So that's what we have right now. Amit, are you streaming 60 Minutes? I'm not streaming 60 Minutes. I'm curious who's on the show today. And I can't even show you clips on the show because CBS is like so uptight with the copyright stuff. Last time I showed it was 10 seconds of a 60 Minutes clip. And they blocked the video. So I see 60 Minutes on my screen right now. I don't know who this person is. It's some blonde lady they're interviewing. I don't know who the blonde lady is, but it's somebody. So we'll get an update on that. And tomorrow, if there's anything important there, we'll talk about that for 60 Minutes. Okay, cool. We got 7 minutes until the Robinhood overnight markets open. So until Robinhood overnight markets open, let's talk Tesla. So Tesla has been pretty interesting over the past couple of weeks. To recap, Trump got elected, Tesla went up. I mean, that's kind of the recap. And that's a simple way to dumb it down. But the kind of core argument there is that self-driving regulations are going to come down. And if self-driving regulations are going to come down, obviously that's going to be very, very bullish for Tesla. Well, this is what the Tesla team announced today. And this is why the stock gapped up at the wee seconds into the after hours on Friday, even though we had an early close, which is V13.2 has started rolling out to limited external customers. From the people on Twitter that have already got the update, that have been talking about it, it is the next best thing since sliced bread. I mean, quite literally, it is the moment for FSD to become what everyone is expecting. Oh, shit. Joe Biden has decided to pardon his son, Hunter Biden, per NBC. Holy crap. Oh, boy. We all kind of knew this was going to happen, though, right? I mean, the guy's, he's not going to be president anymore. Will Trump do it? Maybe not. Maybe so. So Biden, last thing before he leaves, Hunter Biden getting a pardon. You can't even, dude, like, what are you going to say? This is the, it's your son. Like, I think Biden said he wasn't going to do it, though, right? He said that like 5 months ago. He said he wasn't going to do it. Holy crap, dude. He's really pardoning his son. I mean, obviously that means his son was guilty, right? Damn. All right. Well, there you go. That's the update. That's the update. Politician's gonna politician. That is facts. Okay, back to Tesla. So that FSD stuff is a really big deal, and we got a couple other updates from that. So first of all, take a look at what Mr. Elon Musk posted 17 hours ago. Again, this is just giving me so much damn FOMO about Tesla, and I don't know what price I'll be able to get in 2025. We'll see. But look at what he posted. This is a flying car. He reposted someone who made this, and the caption was Tesla 3000. It's like the year 3000. Elon, we saw a couple of weeks ago, or it was a couple months ago, where he tweeted something around like flying wheels on the car. He said the car will be able to fly with like the eye emoji or something. Some people are speculating this is the next generation of Roadster. And from that tweet from a couple months ago when Elon was saying, yes, it might be able to even do things like fly, and he had, all these like secret emojis in the tweet implying that, hey, something big is happening in the context of Tesla, and something big is happening in the context of, the new products that they're rolling out. So you've got FSD13 rolling out. You've got potentially new products coming from Elon in terms of different verticals that Tesla's expanding into, potentially flying cars. Again, I don't think that's happening anytime soon, but the point is, if they start really showing off excitement and momentum, then that's all the street needs to care about to be able to get excited to continue to buy the stock. And you have that after hours pump that we saw on Tesla right at the end of Friday. I'm going to see if I can pull up that chart real quick, because someone always knows. And I'm going to be interested to see in the next 3 minutes kind of how Tesla opens up on the overnight markets, because it's kind of obvious right here that someone knows something. Yeah, take a look at this. So this was the flow, November 27th. And as you can see right here, you do have a decent amount of people buying up options on Tesla. Even Gary Black has gotten much more bullish on Tesla right here. This is what we got from the Barron's report on Tesla, which is the version 13 of a self-driving software that's coming out. Obviously, Dan Ives is very bullish. They're quoting Dan Ives right here, but Dan Ives has a $400 price target, and Gary Black not really co-signing $400, but definitely saying that FSD13 is a very big deal with the repost on what he's saying right here. So you've got a lot of momentum. You've got a lot of momentum in the context of Tesla. Their monthly chart, 1000%, I agree with that, is bullish as well. Gary Tan, this guy used to work at Palantir. He designed the logo for Palantir. He tweeted about Tesla as well, trying to find his exact tweet, but basically the what he said is, after using FSD, I think it was in version 13, it was like 12.8 or something. He thinks there's going to be no reason for people to buy cars in the future. I mean, it was that good. And I watched a couple of videos over the weekend on YouTube with FSD13, actually today, because they just got the update. And apparently it's that good. All of this through vision, all of this through neural nets, all of this through not using LiDAR, right? And kind of the bearish argument from all the people who are against FSD and the way it's trained is that, hey, they're going to have to use LiDAR eventually. They're going to have to not be able to rely on AI. And Tesla's AI team just keeps shocking people over and over and over and says, nope, it's really good. And it's going to get better and better just by training. And with our data moat continuing to get stronger and stronger. Bitcoin right here at 97,572 currently right now. Amid, have you used FSD yet? I have not used FSD. Probably will be using it soon. Again, for me, just haven't had the time to really sit down and use it the way I want to use it. But I will use it. And if I have to pay $99 a month to like test it out for a month, then I'll do that. Probably make some videos on it. But from all the people I'm talking to, it's transformational. And if it's that transformational, along with the fact that you've got Optimus kind of on the way, we'll talk a little bit more about robots and some updates on that. I don't know how Tesla doesn't have one of the strongest 2025s external to like macro events being bad. Robbing it over overnight, markets open in about 30 seconds. We'll check it out. But outside of, the 0% APR incentive is massive for Q4. That's going to drive. I referred another person this weekend to buy a Tesla. I mean, I've referred 2 people. I know many people have referred even more people. So I think Q4 is going to be crazy. I think we're going to get Optimus updates going into 2025 because Elon knows that this is the moment where he needs to really show progress on that robot. I think the street hasn't factored that into valuations yet. And FSD13 coming out explains why we saw the jump on Friday when it came to Tesla. And someone probably knew that there was going to be a little bit of momentum going into what they're ultimately trying to do. And Tesla is up 1% in the overnight markets as we open it up. Here we go. Overnight markets open 350 on Tesla. There you go. Up 1.4% right there. Again, it was up like 1.5% right before the close on Friday after hours. It was a weird spike up all the way to 345 from like 341. And everyone was wondering, why is it gapping up? Well, it's likely because people knew that there was going to be some excitement. Palantir, we are at 66.90, 66.79, down about 0.5%. Robinhood, we are at 37.77, up about 0.5%. Nvidia, we'll talk about them as well. They are up a little bit. Nvidia, nice recovery. Nvidia was at 130 or 131, I think, during this week. So if you bought that dip, that's doing decently okay. 138.43. What else do we have? Let's check Amazon. How's Amazon doing? Amazon right here at 208. Amazon at 208. Okay, Google. Let's take a look at Google and see how we're doing with Googs. Doug, what's up? Thank you for being here. Google 170 down a little bit, down about 0.05%. Okay, SMCI, that one got hit on Friday as well. Again, there wasn't a ton of liquidity on Friday, but we did see some stocks have big moves. SMCI 3240. Shopify, which we'll go through their stats, and that has a lot to do with where the economy might end up in Q4. Shopify is up. It makes sense. Shopify producing some pretty big numbers on Black Friday. So we'll talk about them. Nubank as well took a little bit of a hit. Nubank is currently up 1.92%. Rocket Lab doesn't trade overnight. They need to make Rocket Lab trade overnight on Robinhood. MSTR, let's take a look at that. MSTR is at 406. Wow, up 5%. There you go. MSTR up 5%. Where is Marathon? Marathon is also up 4%. There you go. 28.35 on Marathon. Robinhood again. Robinhood trying to get up to 38. There you go. 37.98. And then we got Palantir right here. 66.80. Okay, so Palantir is going down. And then Tesla. Wow, 352. Look at that. Up 2.25%. Someone always knows. Someone always knows. Oh, SoFi and HIMS. Yeah, let's check SoFi. SoFi is green, 1644. And HIMS is, wow, green, 1.64%. So you got those that are green. But again, Tesla, dude. Tesla. Look at that, 353 on Tesla. This is after a pump right before the end of the week on Friday. And there you go, getting some love. Yeah, right here. So let's take a look at this chart right here on Tesla. As you can see, right into the close last week, you see this green candle right there? This big pop. It went all the way to 348 from the lows of 340. This was just at like 12:45 to 1 p.m. And then it stayed there after hours and it didn't get sold off. I think after hours closed at like 5 o'clock. So you went from 337 on the lows all the way to 348, settled at 345, and now on overnight markets are at 353. I mean, essentially that's a move from 335 to 355, and that's a hell of a move. And that's likely a move because the market or someone in the market knew that FSD13 was rolling out. And if you look on Twitter this morning, FSD13 is beginning to roll out. All of that to say, and then we'll move on from Tesla. Incredibly bullish into 2024. I think at this point, if you factor in what's actually happening with this company and where Elon's going and where, in my opinion, robotics is going, because I don't think we are bullish enough on humanoid robotics. By the way, Brett from Figure tweeted something this weekend as well. Then I kind of don't know what the fair value of Tesla is. I don't know what the potential is of Tesla, other than that potential is very large. And so is 350 a fair price? Is 330 a fair price? Is 370 I don't know. All I know is I think Tesla is one of the companies that exposure is going to need to be had in order to really benefit from the massive momentum of different verticals and tailwinds that we're seeing with Tesla. And that just means kind of getting on and holding on for the ride. So Brett right here on November 29th said, sharing a time lapse of a small feat of Figure O2 humanoid robots doing work. Our robots are reasoning fully autonomously. Much of the core engineering infrastructure has been laid the last 2 weeks. 2025 is going to be, and then you see that emoji there, implying it's going to be crazy. Now, the Tesla robot video we watched last week, that was not a robot autonomously catching a ball. That was not a robot autonomously catching a ball. Elon confirmed that over the weekend. That was a guy in a room wearing like a whatever headset, communicating with the robot, and the guy was catching the ball and doing the hand movements, and the robot was following, which is good because it means the robot is able to like match the hand movements, but it was not fully autonomous. It was not fully autonomous. Elon confirmed that over the weekend. What Brett is showing with Figure, this is fully autonomous. And so again, Tesla's going to get there. Tesla's going to get to full autonomy, and like it's going to happen soon. But the point is, the entire vertical of robotics is not stopping for anybody. And we know it's not stopping for anybody. So the question is, how do you get exposure? And I feel like Tesla's the only public company with a realistic shot of like actually capitalizing on that TAM. Again, that TAM, it sounds crazy, but we're talking about hundreds of billions of dollars of net income. Not now, not next year, but it's coming. And if it's coming over the next 10, 15 years, I think Tesla's going to be one of the main companies. That's why when Elon says 25 trillion, it's not that crazy. It's like, because if you assume hundreds of billions of net income and you put a 30, 40 multiple on that, yeah, you kind of get to these crazy numbers. It is an age of abundance, an age of excitement, energy, momentum, all of that stuff. It will take a lot of execution, but it does seem like Tesla can get there. Okay, cool. So that's what we got in the context of Tesla. Yes, XRP is up. XRP is indeed up. For those that have XRP, congratulations. I don't really know why it's up, but it's up 28% right now. And so if you're in XRP, congrats, you are up a decent amount. And if you're up since if you got in Thursday, like I did, or Wednesday when I bought, you're up like 60%, which is great. Now, granted, will it last? I have no idea, but my $150, I'm hoping to become $1,500 if XRP can 10x. So we're going to let that play out. Okay, so let's move on to some other stuff, particularly around crypto, and then we'll get into some macro stuff. Someone said, Amit, what camera are you using? It is a Sony a6-400. Good camera. Been using it for like 4 or 5 years. So Sony a6-400. I think I pay like $1,000 for it. I think it's cheaper than $1,000 now, but yeah, you should be able to get it hopefully for not more than like $700-800 if you want to get it. All right, cool. So that's what we have with Tesla. Let's talk about Bitcoin. 97,520 on Bitcoin. All the altcoins are doing well. We had Dogecoin over the weekend do very well, up 3.6% right now. ETH is finally breaking out. I mean, Ethereum right here, 3,700, up about 0.38%. It was at 3,100 just a week ago. So you got a nice move on Ethereum, outpacing Bitcoin, and then Bitcoin right here trying to get back to that $100,000 level. Now, what's really important for Bitcoin is that there is a supportive ecosystem in the administration, the upcoming administration, of people that believe in the asset class in order for them to ultimately support Bitcoin as a asset that they want to reserve, which is the whole point of the strategic reserve, and as an asset that they believe can actually help them long-term just by storing value. This is what the Wall Street Journal published this weekend. Under Trump, the U.S. war against crypto is over. They write the president-elect's new SEC chair will likely withdraw from lawsuits aimed at forcing crypto to follow Wall Street rules. So you've got the Wall Street Journal kind of acknowledging that the next couple of months or the next couple of years for crypto are not going to be small in terms of their momentum. Then you have Scott Bessent, who is the new Treasury Secretary. He would be replacing Janet Yellen. And this is what he said back in July around crypto.
I've been excited about the president's embrace of crypto, and I think it fits very well with the Republican Party, the ethos of crypto is about freedom, and the crypto economy is here to stay. The Democrats are running from it because they're trying to wash off the stench of Sam Bankman-Fried and his family's donations to the Democratic Party. So they're willing to take down a whole industry because of bad behavior on their part, bad behavior one actor. And I think that everything's on the table with Bitcoin. And to me, one of the most exciting things about Bitcoin is for a generation of investors who maybe post the great financial crisis have been looking for investment opportunities, or maybe they'd soured on markets. Crypto is bringing in young people. It's bringing in the people who haven't participated in markets, and having a market culture in the U.S. and people believing that markets work for them is a centerpiece of capitalism.
This is the new Treasury Secretary. Think about what he just said right there. Two things that he said that stood out to me. Number one, he said crypto is a new asset class that should be explored by the United States. We need to maintain our dominance, and that's something that, from a diversification perspective, in terms of having various asset classes that are important to the national interest of the United States, he is excited for that momentum, or is excited for that culture to be back in the United States. So that's the first thing. Again, the guy who's running the Treasury is thinking this way. That's bullish. The Treasury is going to have to put up some money to get the strategic reserve. Congress is also going to have to approve it. Maybe there's an executive order loophole that is possible. But the point is, you need to have someone who actually ideologically is aligned with the Trump administration in the context of crypto. Number two, notice what he said right here as well. The youth is getting excited to invest in crypto, therefore we should care about it. That is exactly the same argument that someone else made back in January. And because of that person, we have $40 billion in the crypto ETFs, which is Larry Fink. Larry Fink's fundamental logic for starting the crypto ETFs or getting BlackRock to like become this behemoth when it comes to the Bitcoin ecosystem. And he posted an op-ed about this back in January. He said, young people are not excited about markets. We're excited about markets, all the people that are here, and we are interested in it. But like your average 18-year-old is just not the most interested about markets. A, because they've lost hope. B, because they don't believe in the system. C, because they don't have the financial literacy. There's a host of reasons. But one of the macro things that's changing is people, especially the youth, are becoming more excited about crypto. And if they're becoming more excited about crypto, if there's a way they can invest in crypto via an ETF like IBIT, then that is how BlackRock is going to get the next generation of customers to eventually get associated with the BlackRock name, the BlackRock brand. Essentially, they're using Bitcoin to get more customers, right? And then 20 years from now, when those kids who invested in IBIT via BlackRock now have millions of dollars that they want to invest, they're going to go to BlackRock for wealth advising and management. So it's one of those things where you need to be ahead of these things, because if the youth is moving in one direction and the Trump administration kind of understands this, BlackRock understands this, that's where the money's going to go. And if the money's going to go there, along with the wealth transfer, you got a lot of money coming from baby boomers to the millennials and Gen Z, it's going to go into crypto. And so with all of this to say, the next 4 years, again, every day I'm trying to look for like, what is the bearish part of crypto that's happening right now? And it's just hard to find it. It really, really is hard to find it, given how many companies, how many governments, how many institutions are getting more excited in the context of crypto. One other thing that happened, we're not going to watch this, but Michael Saylor did, maybe we'll watch it at the end of the show, but Michael Saylor did do a 3-minute presentation on why Microsoft should be buying Bitcoin. So yeah, we'll watch it towards the end of the show, but it was one of the best elevator pitches I've heard about Bitcoin ever, especially from a corporate balance sheet perspective. 3 minutes. This was his 3-minute presentation. Satya Nadella is probably not going to put Bitcoin on the balance sheet, not in my opinion, but you never know. You never know. There might be other companies that are out there that see this presentation and, you know, maybe they're not the smallest companies in the world and they decide, hey, this Michael Saylor guy is not that crazy. These are the top 60 companies that are publicly traded that also do have Bitcoin on the balance sheet. He's posted this tweet over the weekend. Some names that you guys are probably familiar with. Marathon, obviously, Galaxy Digital, Riot, Tesla has a little bit over $1 billion of Bitcoin. They have 9,720 Bitcoin. Coinbase, CleanSpark, Square, MicroStrategy, obviously. Cypher Mining, another Bitcoin miner, Exodus, Bitcoin Group SE, another one that was a Metaplanet from Japan. That's a big one. Here's one that I didn't know actually had Bitcoin on their balance sheet. I'm sure no one knew this. Mercado Libre. I didn't know Melli had 413 Bitcoin on their balance sheet. Makes sense in Argentina. So you got a bunch of these different companies that are out there that are adopting this kind of Bitcoin standard. They haven't gone balls to the wall like MicroStrategy buying 380,000 Bitcoin, but they are putting some of it on the balance sheet. And it just takes an Apple, a Google, a Microsoft, a Meta to say, we'll put $1 billion. I mean, $1 billion to these 4 companies is nothing. Like it is, when I mean nothing, it's like it is a penny. So to take $1 billion, I mean, they lose more money on all the other stupid random stuff they try to do, which they have to do, by the way, because they have to keep taking risks. You're telling me $1 billion risk on Bitcoin, which the risk seems not limited in the fact that Bitcoin can't fall from here, but that the overall asset class has compounded the best in human history. If that's the risk you're going up against, I feel like you take that risk. Now, I don't think the Max 7 are going to take that risk because I just don't think their shareholders fully would be on board yet. But if they're warming up to the idea and in the next couple of years, you kind of start to see more momentum, that is another tailwind for Bitcoin as well. John says, so you're basically saying you're holding your $150 of XRP? Correct. I'm holding my, how much equity is it now? It is $250. I'm up 70%. So $250 of XRP. Now, granted, look, again, I don't know about XRP, but all I know is if the crypto ecosystem continues to do better, XRP, different digital assets like Bitcoin, they should do better as well. And, that should be bullish for the entire industry. So that is kind of the update we have on Bitcoin. Beneficial said Hood is the way to play it all. Maybe you won't 5x, 10x like these altcoins, but won't go down with the ship either when the music stops, pauses. I agree. And that's why I am ridiculously overweight Robinhood right now. And so, yeah, Robinhood is still my favorite way to play it. Honestly, I'd buy more Robinhood than XRP because I don't know what the hell I'm buying at $2.40 of XRP, but at $37 on Robinhood, $38, I know what I'm buying. And so, yeah, for me, it's just an easier thing. But I like that XRP is on Robinhood because now when people buy XRP, Robinhood gets a slice of that. And that was juicy revenue that we were missing out for a very, very long time. Okay, cool. So that's what we had in the context of Bitcoin. Is there anything else I wanted to say on Bitcoin? No, that's it. That's all I want to say on Bitcoin. Okay, let's move on to macro. Let's move on to my favorite stuff, which is talking macro. You know, I really love talking macro. Macro is fun. People say macro is boring. People say macro is a waste of time. I disagree. I think some of my best investments this year have been because of analyzing the macro. Now, you can kind of drive yourself crazy sometimes looking at the macro, but I do think it gives you a good quantitative understanding of how the markets are operating. So, a couple of things I want to talk about when it comes to the macro. And the first macro thing, and by the way, macro is not just macro economy. It's like macro events and tailwinds and all these things that are happening. Here's an event that's happening that still has yet to happen because we have Cyber Monday coming up. But Black Friday did happen as a part of this Black Friday, Cyber Monday weekend. And here's what Toby Luke, CEO of Shopify, had to say. Yesterday was an incredible day for our merchants and for Shopify. Merchants drove a record-breaking $5 billion in sales. One day, $5 billion. Last year, they did $4.1 billion. So they're up almost another $1 billion year over year. I mean, that is just absolute insanity. Peak sales per minute were $4.6 million a minute. Again, Shopify gets 2.9% off every single one of those sales. So ka-ching, ka-ching, ka-ching for Shopify. Shopify's egress processed more than 173 billion requests. Peak requests per minute was 284 million on Edge, with more than 80 million on app servers pushing 12 terabytes a minute and 45 million peak database queries per second. Peak database writes was 7.6 million per second. Some people did reach out and say that Shopify was having some problems with their email servers. So it wasn't like fully perfect. There were some hiccups along the way, as you'd expect for a company that's scaling at this much of a level. But what does that tell me along with what happened when I went to the mall? So I went to the mall on Black Friday. I picked up this hat and like a couple other things. I spent like $180. I think I got some good deals on a couple items, but it was packed. I didn't expect the local mall to be packed. It was packed. It was hard to find parking. And I was like, the mall is packed. And then you got Amazon saying that their numbers are good. They haven't given the exact numbers yet. You got Shopify giving you the exact numbers, saying $5 billion in one day. Overall Black Friday spending was $10.9 billion. Is that the exact number? Yes, $10.9 billion across. That was the retail numbers we got on Black Friday. We still have Cyber Monday left, but $10.9 billion was the exact number just on Friday in retail. Shopify driving $5 billion just online. Like, to me, what that signals is Q4 is going to be good. And the reason Q4 is going to be good, it's going to be good for Visa, it's going to be good for MasterCard, going to be good for Affirm, going to be good for Klarna, going to be good for Shopify, going to be good for PayPal. PayPal was number one in the App Store, probably because everyone was downloading PayPal to pay for everything online. Q4 has the tailwind of the holidays, which we still have Christmas coming up. We already had Black Friday. We're having Cyber Monday tomorrow. And this is very consistent with the pieces of macro data we got on Thursday. What was the pieces of macro data we got on Thursday? Well, it was that personal income and personal spending went up. And this is part of the reason we have not had a recession. This is part of a reason we have not had a recession. Personal income went up at 0.6% month over month versus 0.3% expected. This was on Thursday. And personal spending, this was on Wednesday, went up 0.4% month over month versus 0.3% expected. Even home sales were up 2% in October. The street thought they would be down 2%, almost 7% mortgages, 6.86%. People are buying houses. So when you've got this much money flowing into retail, flowing into e-commerce, flowing in through all the payment processes that are navigating these hundreds of billions of dollars ultimately that are being spent over the holiday season in GMV, then it begs the question, where is the recession? Because Shopify cannot be breaking all-time high records year over year if people don't have money, right? Like, at the end of the day, it's just that simple. People have to have the money to be able to spend. Now, I am sympathetic to the argument that people are putting it all on their credit card. That's fair. But one stat to go against all the credit card doomers that are out there saying that credit card debt is at an all-time high. If you look at debt to income ratios in US households, it's the lowest ever. Like, it is the lowest ever. Now, one of the reasons is because asset prices have gone up and household net worths are overall higher. Why? Because the housing market's up, the stock market's up. If you're investing in the stock market, you've done well. 401ks are up, etc. But debt as a percentage of household net worth has started to come down, and it's the lowest it's ever been. Now, does that mean we're gone from all of our credit card debt problems? No, but it does mean that people are paying back the debt to an extent. And if people are paying back the debt to an extent, then an auto debt, I know people are defaulting on automobiles, but that's one sector of the broader ecosystem of debt. If overall debt is decreasing and people are paying back their debt, and you're not seeing JP Morgan. I mean, look, JP Morgan stock would not be at an all-time high if they were coming out and saying everyone's defaulting on their credit cards. Now, maybe they say that in 2025 and JP Morgan and the economy falls by 50%, but I don't think that's happening. And it's just hard to see that happening given the amount of momentum we're seeing in terms of people spending and in terms of debt as a percentage of net worth of households. So from that perspective, it seems like the spending is positive versus bad. And a lot of these buy now, pay later companies, a lot of these payment processor companies, they're going to probably benefit from that over this holiday weekend. Tesla right here at 353, up 2.39% currently in the overnight markets. Dell, let's take a look at Dell real quick. Dell, which took a nasty hit last week. Dell is down 0.545%, so about 0.5%. It was down 12% last week. And then Broadcom, let's take a look at them as well. Broadcom is down. Is NVIDIA still down? NVIDIA is flat. NVIDIA is basically flat. So that's why Broadcom and some of the semis are trending down. XRP tap 250. Are we there? Goodness gracious, dude. Steve must be. Let me check if I have any missed calls from Steve, because usually when this happens, XRP goes up by 1 cent. I have a missed call by Steve. No missed calls by Steve. You know what he's doing right now? He is staring at XRP, probably laughing his ass off right now. Happy. Well, I mean, he should have been buying more at 74 cents if he was this bullish. That was my point. I was like, Steve, if you're this bullish, you should be buying more. But he has his nice 20-cent average lottery ticket for XRP. And then Robinhood, right, is up 38.15 right now. Obviously, crypto doing well helps Robinhood. XRP doing well helps Robinhood because a lot of that XRP probably is being bought on Robinhood. So Robinhood up 1.62% currently right now. Okay, cool. So that's what we got in the context of the Shopify Black Friday numbers. Some other things that are going on into the macro. So first of all, on that Black Friday stuff, again, I think that's bullish. I think Q4 is going to be really good for a lot of these retailers, for a lot of these payment processing companies. And I think the health of the economy, if people have the disposable income to spend, that is bullish. That is not bad. A couple other things. So I should have shared this on the Bitcoin segment, but I'm going to share it now. Tom Lee says Bitcoin to 250,000. So by Thanksgiving next year, Tom Lee thinks we're getting Bitcoin to 250,000. He also did comment on MicroStrategy. Let me play that. I should have played this during the Bitcoin segment, but I'll play it right now. He says MicroStrategy is not being reckless. They're actually being really smart. So here's what Tom Lee had to say about MicroStrategy. And then we'll move on to some other macro things. Tom Lee did issue a Sunday note. We'll read what he had to say about that, and we'll keep going from there.
Could anything derail MicroStrategy's stock play? What red flag should we watch for? Good question. Lon from Rhode Island.
Lon, I might just need to explain for some other viewers what MicroStrategy is doing. MicroStrategy, around 5 years ago, transformed the company by using its balance sheet. They had a lot of cash on hand to buy Bitcoin. And so instead of the stock being valued on its actual software business, which had been languishing, it's valued as a holder of Bitcoin. But as Bitcoin has risen, and MicroStrategy's stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially COCO, zero interest bonds. And so they're funding this without having to actually pay for the interest expense. Now, you might think that this is a little bit reckless, but it turns out it's a very novel strategy because they have created a lot of network value. They're one of the largest holders of Bitcoin now, and ultimately they may become the second largest holder of Bitcoin after the US government. And they're doing this with the ability to borrow at very low cost. You might wonder, why are bondholders buying these bonds? They're offering for the first time the ability for someone to put $1 billion of work in the bond world to own a bond that has exposure to Bitcoin. These have been incredibly high performing bonds. They've been the best performing bonds. So they've helped bond managers outperform by buying typical corporate bonds, but then with this upside in crypto. And so I think that this works unless Bitcoin itself doesn't have a promising future. I think Michael Saylor has not only done something brilliant, but over time, when they do accumulate enough Bitcoin, they're actually going to be able to do quite a lot of novel things with it, whether it's lending Bitcoin or helping some financial system secure Bitcoin as sort of the anchor of that network. MicroStrategy is going to be one of the few companies that has a large holding of Bitcoin that you can actually tap. So it's a very, I kind of applaud the strategy. So I think that there is a lot of upside.
So that's Tom Lee kind of talking about what's going on with MicroStrategy. And obviously he's bullish on it. He's bullish on Bitcoin. He thinks Bitcoin's going higher. The bond market is $300 trillion. I found that out today globally. You got a lot of that money that's kind of being burned up and really not getting a great rate return. It is safe, but Michael Saylor's argument to all these bond issuers is, hey, what if you could actually get upside? Now, the problem with Saylor's strategy for the other Bitcoin mining stocks is that, again, we had Chris on the show last week talk about kind of the hedge funds arbitrage strategy of like this essentially call option you have with a premium to the underlying asset, which is why they're giving the 0% coupon rate, because the convertible note converts at a 55% premium. That's way better than the 2 or 3% they make on issuing the debt in terms of interest. But you need to hedge that strategy. So the way to hedge is not necessarily to short MicroStrategy, even though some funds are doing that, but it's to short all the other Bitcoin miners. And that's why you haven't seen CleanSpark and Riot and all these guys kind of explode like Marathon and MicroStrategy, because the hedge funds are saying, hey, we're long our convertible note and we want that to do well. Bitcoin right here, look at that, 98,000. But if we don't get the upside from the convertible note, we need to get profits on the downside. And the way to profit on the downside and still have a margin so that your MicroStrategy stock, if it goes up, you'll still be in the money, is by shorting the other Bitcoin miners. And that's kind of, the problem that the Bitcoin mining stocks have seen outside of Marathon, because Marathon became a smaller version of MicroStrategy. All of this to say, there is momentum in the ecosystem, not only for crypto, but for the broader macro economy. The reason I'm bringing this up from a macro perspective is because there's a lot of money out there in bonds. And a lot of that money might be saying, you know what, we want to fund alternative methods of bonds appreciating in value with the alpha of Bitcoin associated to it, because a lot of these funds that are kind of like bond-only funds can't actually buy Bitcoin itself. So from that perspective, that's where it gets a little bit more bullish for MicroStrategy and obviously more bullish for the broader crypto ecosystem, and maybe some of that money leaving the bond market and going into crypto, which means, I think the overall crypto ecosystem is worth like 3.5 trillion. Bonds are at 300 trillion. You get even a little bit of that money flowing away from conventional 10-year, 30-year notes into MicroStrategy convertible notes or Marathon convertible notes. It can get things to be pretty interesting and pretty exciting over the long term. Okay, here's what Tom Lee said in the context of macro going into December. So first of all, he said Scott Bessent as Treasury Secretary is bullish. Lee believes that the market has a perception of a Trump put, effectively meaning the market knows the White House cares about stocks. And we had Jeremy Siegel the other day on CNBC also say that this is the most market-friendly president ever. We know that in 2017, Trump many times mentioned, hey, look at the stock market, look at the stock market. He was using the stock market as kind of a personal record in terms of how the administration was doing, which as investors, we kind of care about that, right? Biden's not out here bragging about NVIDIA going to 3 trillion because either he doesn't know that NVIDIA is at 3 trillion or he doesn't care that NVIDIA is at 3 trillion. But if NVIDIA goes to 6 trillion under a Trump administration, you're damn sure right that Trump's going to be out there saying, look at NVIDIA, it's at 6 trillion. This is happening because of my policies. And so for investors, Tom Lee thinks that the broader market is perceiving Trump as very friendly. And that may get them to overlook some of his harsh policies in regards to tariffs that we'll talk about in a second as well. Now, here's a historical stat that he mentioned that I thought was really interesting. The Fundstrat data science team found that in the 31 U.S. presidential elections since 1900, the stock market gained 61% of the time in the 3 months post the election. So basically by the end of January, with a median gain of 5.5%. If we narrow this down to years in which there was no recession and markets were down heading into the election, which was 2024, the stock market rallied every single time, 6 out of 6 historical precedents, with median gains of 7.2%, which means a 7% gain from the 2024 election day would imply the S&P 500 reaching around 6,300 into January, but probably closing in on that 6,200, 6,250 level potentially by the end of the year. Now, the markets closed at their highest levels on Friday. As you can see right here, 602.55. Year to date, we are up 27% in the S&P 500. Again, that is not normal. You average about 9%, and that's on a decently good year. 27% is not normal, especially because I think it was 23% in 2023. So the renaissance of technology, of AI, of interest rates coming down, all these different factors are obviously helping. But Lee believes historically, after the election, when you have the setup that we had going into the election, you tend to get some more momentum. And that means that potentially we are looking at a 6,300 on the S&P 500. Now, we had Deutsche Bank come out on Friday. They say the S&P is going to 7,000. You had JP Morgan and Goldman Sachs say 6,500. You had BMO say 6,700. We don't have FundStrat's prediction yet, but if he comes out in a couple days and he says 7,000 S&P or 7,200 S&P, I'm like, whatever number he puts out is going to get a lot of people thinking, hey, where is this going? Is 2025 going to be just as good as 2024? Is there going to be continued momentum across the entire economy? And barring any crazy macro event happening, I think that is the kind of tone of what a lot of people are thinking, which might be bearish because maybe too many people are bullish, but it also might be bullish because maybe not enough people are bullish, which is actually what I'm leaning towards in terms of how I'm interpreting and what the data that I'm seeing. It's like more and more people are saying, actually, no, we are like afraid of this market, which is why money keeps chasing, because a lot of people have missed out for the past 2 years. Why you still have $7 trillion on the sidelines in money market funds. That money might start to catapult over the next 4 years into the markets, into the crypto markets as well, which is obviously going to be very, very bullish. Dan Ives also over the weekend, he tweeted this a couple of hours ago, and then we're going to get into a preview of what December may look like in terms of different stocks. Dan Ives says that we expect tech stocks to be strong with a Santa rally as the street further digests a less regulatory spiderweb under Trump, with Khan and FTC days in the rear view mirror, meaning all the Google and Microsoft investigations potentially kind of just go away once Trump gets into office. Stronger AI initiatives on the way, and a Goldilocks foundation for big tech and Tesla into 2025. I believe Dan also said that Tesla is his number one pick going into 2025 as a company that potentially has $1 trillion of opportunity with this robotaxi network. And so if that's the case, folks, then 2025 might not be as bad as some people think. And if 2025 is strong, then I think you're going to have a lot more momentum probably going into December, because obviously if the market's expecting 2025 to be good, and the market could be wrong, right? The market's been wrong before. But if 2025, the expectation is that it's going to be good, I mean, people are going to get in before 2025 happens, and that leaves you with the last month of the year, December, where maybe that takes place. And so that's obviously relatively bullish. Now, here are some things that might not be as bullish. You got Trump right here saying that the BRICS countries will face 100% tariffs if they create a new currency to replace the US dollar. It's kind of funny because you got Trump basically hyping up crypto, which is, or Bitcoin, theoretically a new currency to an extent, right? Like it's kind of a new currency. I guess it is a new currency. It's not really necessarily used just as a currency, but you got Trump basically threatening tariffs based on if BRICS were to adopt a new currency outside of the reserve dollar. Exactly what he says. The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye into selling into the wonderful US economy. They can go find another sucker. There is no chance that the BRICS will replace the US dollar in international trade, and any country that tries should wave goodbye to America. Now, why is this not the worst thing in the world to the markets? This is a relatively hostile threat, is because I think the market likes this. I think the market likes that he's threatening, because the market's also thinking, hey, tariffs are not horrible if they're deployed correctly, and we need someone who's going to aggressively deploy them, but they need to do it in a way that actually gets a deal done. You can't just slap a bunch of tariffs, which is, from my understanding, not what Trump wants to do. He wants to get deals, and the guy is a negotiator, so in order for him to get those deals, he's going to have to be a little upfront aggressive, but that's not the end goal, is to just be aggressive for no reason. So if that's the case, then you might have an argument where the market is actually on board with the strategy. They didn't freak out last week when Trump announced wide sweeping tariffs. And the biggest bear case of the Trump presidency economically was tariffs lead to inflation. Maybe that doesn't happen. And if the market thinks that doesn't happen, then if you take away that bear case, outside of just random inflation because there's more spending, which technically GDP growth should outpace that, so it should kind of be a wash. Maybe inflation is not the biggest thing in the world. Blake mentioning Trudeau. Well, we did have Trudeau as well over the weekend. Actually have a nice Thanksgiving dinner with President Trump. So that happened right here. Mr. Trudeau said, "Thanks for the dinner, President Trump. I look forward to the work we can do together again." So you got Trudeau basically saying, you know what? I'm not going to be hostile with this guy. I'm going to sit down with him. I'm going to work with him. I'm going to try to get a deal done. Like, look, these guys are smiling right here. Do you think Trump's, saying, "Oh, we're going to tariff the shit out of you"? No, I think Trudeau knows that Trump's is saying that to say that. He knows how the game is played. And in this meeting, hopefully they got closer to getting to a deal that's more likely beneficial for both countries. But nonetheless, that is what the market is perceiving. And ultimately, we're going to see how the market interprets it over the next few months. And that's what we got going on in the context of Trump. Any thoughts on KULR? No thoughts on that one. I know it is having a decent run, so congrats to anyone who is in it. I am not, but no current thoughts on that. Bitcoin right here, 97,800, Ethereum 3,700, and then Dogecoin currently at 45 cents. Where is XRP? XRP is at 248, 237. 237. So down from 250, currently at 237 right now. Futures are down. The reason I didn't show futures is because they're all down. So there's not all the indices. I mean, they're not down. They're like flat. Yeah, I mean, take a look at this. They're all flat right now. Nothing too crazy. I mean, basically not moving. 0.04%. So futures kind of flat. Nothing too crazy. But individual stocks like Tesla are getting a bit of a bump as FSD13 is starting to come out and getting more interesting. Okay, cool. So that was what we had in terms of the Trump stuff over the weekend. Now, a couple of things I want to show you guys. I want to show what are the best performing stocks and worst performing stocks of 2024. And then I'm going to go through a couple graphs. So here is the best performing stocks. A lot of you guys probably own one of these stocks in the S&P 500. And the other ones I don't even know about. So these are the names right here. Palantir, 290% year over year or year to date. Vistra, 315%. Texas Pacific, 209%. Nvidia, 179%. GE, Veranova, up 154%. Axon, 150%. Targa, TRGP, 135%. United Airlines. Again, I use United all the time, so it's crazy that you didn't expect an airline to do this, but 135% for United. Constellation Energy, they had a big deal with Microsoft that helped them 119%. And then Howmet, I don't know what that is. That's up 118%. These are S&P 500 best performing stocks. There's a lot of other stocks that are up much more than 200-300%. Those are in the small cap range. I mean, some of these numbers, even Rocket Lab is up like 400%, right? So you've got other stocks doing very well, but in terms of S&P 500 names, these are the names. Tesla and or Nvidia and Palantir, I know a lot of people own those names. But the other ones just goes to show you how strong of a broad market rally it's been, because these other names that I think people even haven't heard of, including myself on some of them, are the best performing names in the broader S&P 500. Now, what are the worst ones? Let me see if I can pull this up right here, because the worst ones I thought were the more interesting ones to take a look at and see if there is potential opportunity in those worst performing stocks. So let me pull that up right here. And we'll kind of see why they're the worst performing. Obviously, their sectors have not been done that well. By the way, fear and greed, we are still currently at greed right now. So we have not evolved from greed. We have not gone to extreme greed yet, but we are still green. Okay, where is this post? Let me see. This is not the exact post, but this is the post I'll show you guys. This is not the exact post, but this is pretty much this pretty much sums it up. So this is as of November 29th, so as of Black Friday. Worst performing stocks. Walgreens, number one, down 62%. We all know why Walgreens is down. Moderna, down 56%. Intel, we know why Intel's down 51%. Moderna got hit even further when RFK got nominated. So that's not helping them. Dollar Tree, bad earnings, down 50%. Enphase, Solar's not been really good, down 50%. Lululemon, consumers been shopping, but maybe just not spending as much money at Lululemon. That's down 37%. Nike, which again does look like there is a recovery built into that stock eventually, but that one's down 27%. And then Paramount as well. That one is down 25%. So you got a bunch of names that are down in 2024 in one of the best bull markets that we've seen in a long time, and big names like Boeing, Estee Lauder, Dollar Tree, Intel, Walgreens. I mean, these are pretty big companies. Walgreens, again, doing almost $150 billion in revenue, down 62%. I think the broader question for 2025 is going to be for the names in this list that have exposure to China, which Dollar Tree, Nike, Estee Lauder, they all have exposure to China. Will China rebound? And if China can rebound and get the stimulus that we need in China to be effective, I think these names potentially get just like a sympathy recovery from that. And then second of all, can some of the companies that are just like bad companies like Walgreens, just like not been managed well, can they turn around as well, or do they go to bankruptcy? I think 2025 is going to be a very important year to kind of see, can we have the losers of 2024 recover, or do they continue to lose and the money just keeps going to Meta and Amazon over Enphase and Dollar General and Intel? Or do we get a little bit of recovery? But these are the names, I mean, maybe not the best fundamental companies, but if you're looking for things that are not up, but maybe have some hope in them, like Bill Ackman is seeing with Nike, these would be the names to kind of look at going into 2025. And that's what we got going there. June says opportunity in Dexcom. I learned about Dexcom this year. Don't know too much about them, but that one took a nasty hit. I think like 60% on one of these earnings because they missed. June says Dexcom can recover. Boeing and Nike are interesting as well. I agree. Boeing and Nike are interesting. Walgreens is one of those plays where it's like, hey, is it going to actually turn around? Because if it turns around, maybe there's something exciting there. If it doesn't turn around, then all right, Nike's just kind of, or not Nike, Walgreens just stuck in like a potential bankruptcy that might happen, potential bankruptcy that might not happen, but it's stuck in limbo. And I think a lot of people want to see more momentum on that name to get excited to get in. If Walgreens could even move like 20 or 30%, which would not be crazy given how oversold they are, I think then you would get a lot more buyers to be like, oh, there's like alpha in this name. There's something happening. But staying flat, which might be the best opportunity if you believe there's alpha in Walgreens, is not really getting the broader market to get excited right now about it. So that's what we got going on right now for some of the best and worst performing stocks. Okay, so that's what we got going into 2025. Now, I want to show a couple other headlines. So earnings this week as well. We actually do have a decent amount of earnings. I thought earnings season was relatively over. It's not over as much. This week we have Salesforce, Marvell, Okta, DocuSign, Zscaler, Asana, GitLab, Box, HPE, Ulta Beauty, Lululemon, Dollar General, Dollar Tree, Foot Locker, American Eagle, Five Below, Chewy, Petco, Kroger, and Campbell's, and Hormel Foods. So we actually have a decent amount of earnings this week. Not the most important companies in the world, but still companies that do matter. Like Salesforce is going to be a huge one. It's time for Mark Benioff to show that Agent Force is like a real thing. Lululemon, that's going to be important. If Lululemon has positive growth, and that means the consumer potentially has enough money to even spend on Lululemon, Ulta Beauty, Dollar General, Dollar Tree, these companies that have really got hit over the past year because consumers have been tough to come back to those stores. If they show some good results, then that's going to be very important. Is Chewy still a meme stock, or are people over that kitty guy now? So Chewy is, I still think meme-ish, but it's not fully a meme stock because Roaring Kitty sold out of Chewy, I think a couple months ago. It was disclosed that he got rid of his like 9 million shares. Chewy at $33, it's actually up decently year to date. Again, the broader market has done well. Chewy is up, 50% year to date. So I think Kitty got out at like 26, 27, currently at 33. But Kitty is currently not in Chewy right now. Kroger's a good one. Yeah, Kroger's also going to be a very important one, so we're going to have to look at that as well. Dexcom sensors change every 10 days, freestyles every 14 days. Yeah, again, Dexcom is an interesting one. It's a very important company doing a lot of important stuff with glucose monitoring, but I don't fully understand the business that well, and I also don't understand if there's a moat. So that's one to do some research on, but it is I don't know if it's oversold, but it's definitely sold off a lot this year. And the question is going to be, does the market see some momentum in this one? Same thing with TMDX, again, small cap one, doing a really important thing with organ transplants, but they got sold off like 30, 40% after that earnings as well. Okay, so that's what we have with some of the worst and best performing stocks and earnings coming up this week. Couple headlines. Saudi Arabia Treasury holdings are the highest since 2020. Saudi Arabia's holdings of U.S. Treasuries as a portion of foreign assets held by its central bank rose in October to the most in 5 years. They now have 144 billion in U.S. sovereign debt. So the Saudis have been buying U.S. debt. And here's something that's really interesting as well. JP Morgan's Jamie Dimon said that he didn't want to be part of the Trump administration. Turns out he's been talking to Trump for months. And that's why he's been kind of nice when Trump is brought up in interviews over the past few weeks. JP Morgan Chase's Dimon has been secretly talking with Donald Trump for months, and NY Post is reporting that. It seems likely, dude, even if he doesn't want to work for Trump, he had that famous comment where I didn't have a boss for 20 years, I don't want a boss now. That's fine. But I definitely think he wants to have influence in the administration, kind of like an Elon Musk figure. So Elon's not working for Trump, but Elon's working with Trump. And I think Jamie Dimon is doing the exact same thing. And if that's the case, then, you're definitely having some very influential people that are talking to Trump, and probably influential people that want the markets to do well because, they care about the markets. Dimon is anti-crypto. Now, he was anti-crypto. I'm sure he's not like, I love crypto, like Michael Saylor, but he has changed his mind. He is not as crazy about crypto as he was back in 2019, 2020 when he hated it. So I do think he's getting more friendly towards it. The question is simply going to be, what level of influence does he have? But I don't think he's also necessarily against crypto as much, because I think he's looking at JP Morgan that used to be antagonistic to the concept of like a decentralized currency. And now he's looking at it and he's like, wait a second, it's becoming centralized. And one guy, Michael Saylor, owns 400,000 of it, almost 2% of the float. How does JP Morgan make money off of it? And I think he's thinking, wait a second, if JP Morgan can make money off this thing, then maybe I shouldn't be that antagonistic towards it. So I think that's the mindset shift that's happening, but we're gonna have to see what he says over the next few years as crypto continues to expand. All right, here is a new chart. The S&P 500 closed above 6,000 recently, hitting another major 1,000 milestone and second one this year. We hit 5,000 this year, then we hit 6,000. So this chart is showing what happens 1 month, 3 months, and 6 months, and 12 months after a milestone is achieved on the S&P 500. So we had the S&P 500 closing at 100 in 1968, 1,000 in 1998, 2,000 2014, 3,000 2019, 4,000 2021, 5,000 this year, and then 6,000 this year as well. 1 month after you get a milestone, on average, market goes up by 1.7%. 3 months after, market goes up by 3.7% on average. 6 months after, the market goes up by 7.4% on average. 12 months after, the market is up about 5% on average. All of those things happen with an 80% probability given the historical precedents. So the kind of revolving point here is that it's not bearish to hit new all-time highs. And I think people have heard this before, right? This is not something super original, but it's not bearish to think that we're hitting all-time highs, that we have to come down. I know everyone's triggered by 2022 when we hit all-time highs in January and then we proceeded to collapse 30%. But again, this is why understanding the macro is important. It was a totally different macro environment. SoFi right here up 1%, 1655. This macro environment we're going into seems to be a bit more decisive and more just honestly pro-growth. And if we're more pro-growth and we actually get that growth, then I think the markets are going to like what they're seeing right here. Another piece of growth news, Elon's XAI. So Elon has given 25% of XAI in equity to the people who bought X shares when he was trying to buy X for $44 billion. So let's just assume like 50 hedge funds, private money managers, VCs, et cetera, came together. They gave Elon the money he needed to buy Twitter, which was now X. Obviously, that investment has gone down dramatically. Fidelity wrote it down like 80%. Fidelity marked up the value of their holdings in X by 32% in October, which is the largest monthly increase since the acquisition in 2022. So Fidelity used to think the company was worth somewhere closer to 10 billion. Now they think the company is worth 17 billion, which is not bad. That's not bad. Now, why are they doing that? Because Elon is taking a piece of XAI, which just raised at 50 billion. So they doubled their valuation in 5 months. And he's like giving those shares to X equity owners, debt issuers, etc. If you invested in X, you are getting a piece of XAI. And the sort of legal way that he's doing is he's just transferring some of his own liquidity or his own stake, giving it to people who backed X. Really a sign of Elon just saying thank you, and also a way for them to be like, hey, It's, if I invested in X and I'm down 70% on my investment, I don't think Elon wants to take phone calls all day from those people saying, hey man, get the advertising up. Hey man, get the subscriptions up, yada, yada. I think if Elon could just make them whole by making their equity stake worth more because he has this AI startup that's going to the moon and has unlimited amounts of money. And then it buys him more time to make X actually worth 44 billion, which it's objectively not worth 44 billion yet. But I think over the next 5-10 years, it will be much more than 44 billion. Then essentially the people who gave him that money are probably happy because they're getting a stake in something that they think can go to $1 trillion, like XAI. I mean, if you think OpenAI can go to $1 trillion, then maybe XAI has a chance to do that as well. And they're holding onto their X shares without needing the necessity to sell, which is a good thing, which is not a bad thing at all. So I think that's one of the other macro things we're seeing in the broader AI landscape. More AI companies are getting growth. Bitcoin right here, 97,000. And in the context of Elon, he's able to transfer that growth or use that growth to make whole some of the people that trusted in his vision when he was buying X. Dogecoin right here at 45 cents, Ethereum at 3,700, and Bitcoin right here at 97,840 currently right now. My SoFi $17 covered call is coming under pressure. She's a good problem to have. Average SoFi price at 744. Yeah, on SoFi, the covered calls have been bad so far. On Robinhood, the covered calls have been bad. Palantir, the covered calls have been bad. Rocket Lab, the covered calls have been bad. If you really care about holding on to those shares, I haven't wrote covered calls on Robinhood. Because I'm scared to write cover calls on Raw, and I've got a decent number of shares that could be producing a decent amount of income. But I genuinely think the catalysts and the tailwinds are there. Same thing for SoFi, same thing for Palantir, same thing for Rocket Lab. So I think covered calls going into the end of the year, either they're going to be a great hedge, but if you really care about those shares and want capital appreciation, I don't trust it yet. Until those companies get to a point where it's like, all right, like, can it really keep going higher? Which on Robinhood from 37, I think there's a pathway to 45. Palantir, look, I know 75 is kind of out of reach, and at 66, and we'll talk about Palantir in a second, 66 is up there, but could it get to 75 end of year with the QQQ rebalance? Yeah, I think that's possible. I think that could happen. Rocket Lab, I mean, I don't even know like if Rocket Lab can keep going from here, but like, is there a shot that they have more announcements and they get to profitability soon? And then again, it's only a $10 billion company. The market gets excited. Yeah, Rocket Lab maybe hits 30. It was almost at 30 on Friday. So I think covered calls going into December is definitely not going to be easy to execute unless they're very conservative. But if they're very conservative, the premium might not be that good. I think in 2025, as the market potentially kind of recoups itself, that's where covered calls get a bit more exciting. But it might take some time before you're easily able to just think like you can sell covered calls without worrying about it. And again, you need the stock to stay flat to sell covered calls realistically. And if the stock is in an uptrend, it's just really tough to put some covered calls on it. Bitcoin right here at 98,000. Again, Bitcoin flirting with 99. It was at 98.2. It wants 100. I mean, we all know it wants 100. The question is going to be when it gets there, and the psychological barrier that is removed when we get over to 100,000 and people are buying IBIT at like $65, which implies $100,000 Bitcoin, and they don't care that they're buying IBIT at 65 and they're selling calls and puts and all that stuff. I think that's going to be a big deal. Just like getting from 19,000 to 20,000 was a big deal 4 years ago, but we've got to get there. And currently we are not there yet. But hopefully that happens. Hopefully that does indeed happen. Oh, we got Sachin in the chat. All right, let's talk about Grab. So I think we can end the show on this, and then let's do Grab, then Palantir, then we'll watch the Michael Saylor Bitcoin video. I always try to keep these shows to an hour, but you guys know I fucking talk like I just can't stop talking. So we're probably going to go to an hour, 30 minutes. But let's talk about Grab real quick. So, and then we'll talk about Palantir. I published my Grab thesis on Twitter over the weekend. So if anyone read it, you can read it right here. I'm putting it here in the chat for anyone that wants to check it out. Here's my takeaway from the thesis, from the response I got to the thesis, and then I'll talk a little bit more about the actual thesis itself. There are a lot of people that care about Grab, okay? There's a lot. This got 1.4 thousand bookmarks. And bookmark is the highest level of signal you can get on Twitter in terms of engagement because it means people are saving it to read later. Now, how many of those people actually go back and read it? We'll never know. But the fact is 1,400 people said, hey, we want to save this because we think there's something important about this. And that is not my post per se. That is the concept of Grab being on people's minds, whether they used the product before, whether they've been thinking about the stock, whether they saw it in some article and then they find my tweet where I'm talking about it. There is momentum behind the retail investor base around Grab. I had multiple DMs over the weekend of people in the Grab community who have connected with me. It kind of reminds me of early days Palantir Robinhood community. Obviously, Grab, I don't know if it becomes the companies that Robinhood and Palantir have become, but apparently there's like an underground group of people that have been talking about this name since $3. Sachin in the chat is one of those people as well. And I'm just discovering it at this $5 range. And I'm liking what I discover. I want to share a couple things I discovered over the weekend. But I also like that there's a big retail community. Why do I like that? Well, two reasons. Number one, Grab has 4 billion shares outstanding. So for anyone thinking this is going to go from $5 to $7 quickly, you're going to need a lot of buying pressure, because when you have 4 billion shares outstanding, yeah, it's not, I mean, Palantir has 2 billion shares outstanding, but Palantir is becoming this global brand that everyone loves. Grab is not there yet in terms of the stock. So you need more people to be interested about it. And it seems like there's a lot of people being interested, which is why it's getting some momentum. Number two, the reason I like that there's this big retail community is because I found out so many things this weekend about Grab that other people DM'd me. And that reminds me of early Palantir at $5-6, early Robinhood at $7-8, maybe early Grab, if it's early, at $4 to $5, because I think this thing could go back to $4 just as easily as it can go up to $6, right? I don't think it's really developed a full breakout yet. Shares are up from like the $3 range in January, but I don't know if it ends out the year necessarily in that range. So I like that there's retail momentum. I like that there is exciting. And I also like that it's misunderstood. I mean, the amount of, because you don't want something where everyone loves, right? And so there was a lot of positive comments, but there was also these comments of like, oh, well, the CCP will stop it from winning. And I'm like, they're not in China. It's like, I know you think like it's Asia, China. It's like, no, dude, they're like in Singapore. It's like, it reminds me of the TikTok CEO when he was getting grilled by Congress and they're like, so what do you know about the CCP? He's like, Senator, I'm from Singapore. He's like, yeah, but what about your Chinese passport? He's like, Senator, I'm fucking from Singapore. Like, what are you talking about? Right. So I think there is a lot of misunderstanding around it, which is really important. And that's exciting to me as well, because I think that's important to see. Sachin right here says, many of my colleagues left to join Grab. Also, one thing difficult to understand in the USA, for a company to be successful in Asia, it has to be connected to the right families, regulator, and politicians. That is 1000% correct. It has to be connected politically in the right ways, because it's, Southeast Asia is not as free of a democracy as the United States, where pure meritocracy can get you to win. Like in those areas, those regions, it's much more harder to win. I learned a lot more about the CEO, and that's where I want to kind of start this segment right here. Anthony Tan is a freaking rock star. And this is a guy who gave up his relationship with his father. He's a founder to start Grab. Here's what he had to say about his relationship with his dad.
And lastly, this is more of a personal question, but how does your dad feel now that Grab's become so massive?
Well, the reality is he hasn't spoken much to me yet. I will continue to reach out with love, and I hope one day he will see that there's no other intent but love. And I'm always grateful that he shared all the teachings of Confucianism, the idea of working extremely hard, the idea of honor. People say you're zero to hero, but it's not me. It's all these sort of unnamed heroes and angels that literally help prop me up. And I literally stood on the shoulders of giants to get to where we are today.
Okay, so I really like the founder. I really, really, really like the founder. I've been doing a lot of research into this guy this weekend, trying to understand who he is, I didn't even know Grab was still operated by the founder. I thought there was a regular CEO. Founder, CEO, his father had a car business. It was passed to him from his grandfather. The dad wanted the son to take over the business. The son said, basically, no, I'm building my dream. I'm going to go start the startup. Went through hell to start the startup, barely raised money. And now it's at a $20 billion market cap today. I really like these types of people that go through hell, that give up, familial relationships. Again, if you're familiar with any type of Asian culture, you don't just give up a relationship to go pursue a career. And you only do that if you think you can pull it off. And then even when you pull it off, as he said, your parents don't even want to talk to you because they never supported your decision in the first place. So from that perspective, I think the founder has a level of excitement and energy towards him to make this business succeed, because quite literally, if he doesn't succeed, then he's going to feel like a failure to his family. And that's a hell of a motivation when you want to be successful, when you want to win. and when you want to prove to your family that you made the right decision. Now, his family might never accept him, but the point is internally, I still think he is motivated to build Grab to be as big as it can be. So that's very important. Okay, so that's what we got on the founder. Melanie says he seems humble like Sir Peter Beck. He's very humble. I would suggest people just look him up. Just type in Grab CEO. You'll find a 13-minute CNBC little documentary on him. One of the most humble CEOs that I've seen all year in terms of how he thinks about the business. And he really cares about the opportunity and the jobs that they're creating for the gig economy in Singapore and Southeast Asia. So that's the first thing about the founder. Second thing, and a lot of people forget about this when they look at the valuation. And this is another reason why I think this is good, because you want people to not understand it. When Robinhood, people say, oh, GameStop, they didn't get it. Palantir, oh, it's a black box. Alice Carbon's crazy. Okay, shut up. You don't get it. Grab, they're looking at 20 billion and they're thinking, hey, that's kind of expensive. These guys have 6 billion in cash. 6 billion in cash. That means for every $5 share, 60 cents is your cash, which means 440 is the enterprise value per share, or 14 billion. So when you look at it from an enterprise value perspective, 14, because again, when you're buying a company that has that much cash, you're just buying cash, right? So you have to factor that, especially these companies that are under a couple $100 billion market caps. You have to see, all right, what is the value that we're buying? What is the premium that we're actually paying on the company? And when you take away the cash and use the enterprise value to then try to come up with your multiples, the multiples look much, much cheaper than what they look at right now. Now, again, 4 billion shares is a lot of shares. So I don't know. My price target is $10 by 2027. That's a double in 2 years. Some people are like, oh, that's not enough. I'm like, okay, whatever. Like a double in 2 years to me is amazing. I think $10 could happen before that. But the point is, you've got 6 billion in cash, $14 billion enterprise value. That price to sales of 7 starts to go down a little bit if you do an enterprise value price to sales versus just pure price to sales on the market cap. And then the free cash flow, price to free cash flow is at 31. I think that number is going to go down as well as their adjusted free cash flow margins start to go up. Now, free cash flow on their EBITDA margins increased by 15% last quarter. That's why the street got excited, because their EBITDA is actually going up. So the street's like, oh, they're like becoming operationally more efficient. And they produced a net income of $15 million. Now, $15 million is not a lot of money, but we've seen this with Palantir, Rocket Lab, SoFi, Robinhood, all these guys. As soon as they start producing GAAP net income and they have a shit ton of cash on the balance sheet, which when you take that cash away, the company starts to look a lot cheaper and they're profitable, which is why if you're looking at the PE, it's just the wrong way to look at this company right now. You start to get the street that gets excited. The street's like, all right, wait a second. So they're growing 17%. There's these segments of the business that are growing like crazy that we'll talk about in a second. Founder's a rock star. Founder went through hell to build this company. Publicly listed, profitable, EBITDA margins going up, adjusted free cash flow going up. Can they increase profitability, and can they keep expanding the brand presence against the competition, which there is some competition, and I'm doing more DD on the competition, but from my understanding, competition's there. It's just not as aggressive to the point where, you don't see Grab being a winner long-term. And from that perspective, I think that's what the street's getting excited. Here's another part of my thesis that I really liked about this. This was really interesting to me as well. Uber had to Uber has to leave their Southeast Asian business and essentially give it to Grab. And they just took equity stake in Grab instead. I believe they own about 25% of the business, might be a little bit less right now. And the Uber CEO, Dara, joined the board of the company. So you got a company that's becoming a verb in the 8 countries that they operate, 700 cities that they operate in. You got a company that forced Uber essentially to leave the region because no one was using Uber. They were using Grab because Grab was too sticky. And you've got a company that now has 42 million monthly transacting users, with 37 million of them doing repeat purchases. I think in 2 years, if we assume more EBITDA margin expansion, more GAAP profits, 2 years of revenue growth closing in on 20%, 2 years of buybacks, they're buying back $500 million of their stock. They already spent $200 million buying back some shares, and 2 years of continuing to build up the brand presence, along with a consolidated base of 2 years, as we can see in this picture right here, from 2021 after it's SPAC'd all the way to 2024. By the way, the fact that it's even surviving as a SPAC, because most of those failed, that to me is also bullish. I think there's some momentum here, and there's actually some real excitement when we look at Grab. Sachin says at the start of 2022, Grab was 1 billion negative in net income, and only in Q4 2021, and 3.5 billion negative for a whole of 2021. So yes, from there to 15 million while boosting cash position and no debt is very impressive. I agree. No debt. They went from negative 3.5 billion to positive 15 million, which hopefully is in an uptrend to remain profitable. And then you have the most stupidest is wrong grammatically, but you get my point. One of the most stupid downgrades that happened, and even Sachin talked about this on Twitter, from Bank of America, where they said, sell it because the shares are going up too fast. It's like, what? Like, that's what they said about SoFi. They said that about Palantir. They said about Rocket. Like, all these downgrades that come because the sell side analysts are probably getting a little bit of a note from hedge funds to say, hey, keep this thing down. We don't want too much momentum here. We want to, keep it depressed so we can keep loading up. That's what it felt like. Because as a sell side analyst, your job is to sell the idea. And if the stock, like, is Mariana saying sell Palantir because Palantir is going up too fast? No, she's raising the price target. She's saying, hey, I said 60 or I said 55. Now I'm saying 75. Because a sell side analyst makes more money when the stock goes up and clients buy it, and they make more money because they pay for more research. They get bonuses. All that. You never say, oh, Palantir's up too much, take profits. Like, they're not doing that, right? Because sell side analysts just don't do that. So the fact that they did that on Grab to me was oddly peculiar. I think it creates a great dip opportunity. But to me, it's a hit piece. And the fact that it's maintaining $5 above that hit piece, it was closing in on $6 a week ago. I think that's exciting as well. And that's bullish to me as well. Okay, what does Grab do? Grab is the Uber of Southeast Asia. Think of it as DoorDash, Grubhub, Postmates, Uber Eats all together inside of that one company. Think of it as WeChat. Like, some people are saying, oh, it's an Asian Uber Eats. Where's the moat? I'm saying, no, it's a WeChat of Southeast Asia. And there's a very big moat in WeChat when you look at what is happening with WeChat in China. Now, the other thing that's really interesting about Grab, and the last thing I'll say, then we'll move on to Palantir. They're operating multiple banks as a part of their business in multiple countries that they operate in. So the reason their cash went from 5.3 billion to 5.8 billion is because they got an extra $500 million of deposits in Q3. So when I think of the cash they have on hand as a percentage of the market cap, and we're seeing the deposit growth, they have about $1 billion of deposits after the first 4 quarters of launching this thing. If they start to get $200-300 million every quarter, if not 500 million to $1 billion every quarter in deposits, these guys are just going to be adding hundreds of millions of dollars to the balance sheet in terms of cash. And if the stock continues to stay at $5 or $4.50 or whatever it is, the cash as a percentage of the market cap will continue to grow every single quarter, which is very, very bullish. This is exactly what I saw, not on Palantir per se, because Palantir's market cap was always elevated against their cash, but it was very similar to what we saw in Robinhood, right? When Robinhood was trading at, $9 billion at $6 billion in cash, like, it didn't make any sense. Now, Grab is at a $20 billion market cap, $6 billion in cash. But if they stay at a $20 billion market cap, meaning let's say the next 5 months, the stock doesn't move, stays at $5, and they get to $8 billion in cash, or even $6 billion in cash, or $6.3 billion in cash, that means more of the shares you're buying are just cash. And if EBITDA margins are increasing, free cash flows are increasing, net income is increasing, net income margins are increasing, buybacks are increasing, it just becomes a pretty exciting story at that point. And the question is, I don't know if the street's going to let it stay depressed for that long if all those metrics are going up and to the right, and you've got a broader global bull market where the market is searching for other names outside of U.S. companies. Why? Because the United States is freaking expensive. The United States is expensive compared to the rest of the world, the rest of these emerging markets. The question is, and I'm not a big emerging markets investor because I don't trust a lot of companies overseas. Grab is one of the companies that I'm starting to trust more. By the way, their shares are also not trading on ADRs. They're on the NASDAQ exchange. So it's not like you're buying something that controls the shares in another country like you're buying with Alibaba or all these other names. Like, Grab is like legit on the NASDAQ exchange. Like, when you're buying it, you're buying a US operated share of Grab. So look, I think there's a lot of parts of the thesis. I think it makes a lot of sense. I haven't even talked about their advertising growth. I haven't talked about their micro loans. I mean, they, on the earnings call yesterday, they talked about, or from 2 weeks ago, I listened to it yesterday, but they talked about this dude who's operating a burger chain in Malaysia, and he's getting a loan from Grab, and that's helping him buy the beef, which is the biggest input cost to building those burgers. And then he's advertising on the platform itself. So he's getting a loan, he's advertising, he's growing his business. Like, there's so many things these guys are doing that are becoming more of a super app to me versus just a ride hailing app, along with sticky users at 42 million monthly actives. I think there's some momentum there. And so we're gonna have to see how the story plays out. But I think $10, 2027 is not crazy. And I think I'm loading up shares, I'm loading up leaps. And when I'm done with my position, I'll let you guys know. I've not really a big position yet, maybe like 5-6 grand in it. I want to get that position to be much higher. But it's one of the names, primarily based on the founder, after this weekend of really deep diving on him, that I'm getting more convinced of. The numbers look great, the margins are great, or it's at least getting in the right direction. But the founder himself, the fact that he gave up his relationship with his father, that matters, dude. That matters. And some people might look at that and say, oh, that's bullshit. That doesn't matter. It's like, no, dude, that's like part of the reason people miss Palantir is because they didn't understand Alex Karp's unique relationship with philosophy, Western values, and how he interprets the geopolitical landscape that exists. I mean, for goodness sakes, Palantir was $12 in January of 2022, and Alex Karp did an interview with Kevin Warsh, who almost became the Treasury Secretary, but then Trump went with Scott Bessent. And he said, basically, Russia's going to invade Ukraine. I mean, that's basically what he said, right? You can watch that interview back then. He was talking about kinetic warfare, and he kind of talked about, hey, the good times are over. We're not going to be as globalized as you guys thought. 1 month later, what happens? Now, if you knew the CEO's relationship with the DoD, with very confidential information, with the way he philosophically thinks of the world, that became a moat in terms of understanding where Palantir was headed when it was $12, and then it ended up going to like $6, right? But like that was important. I think the motivations behind the CEO are very important. I think understanding Vlad as a founder, how he messed up in 2021, how he's recovering from it, how he thinks about product and product is everything and get people onto the product, how he created multiple companies that were product focused before creating Robinhood, that gave you a competitive advantage in terms of understanding the thesis. I think same thing for the Grab CEO. Very important to understand kind of how he operates, what he thinks about, and how the market ultimately perceives the momentum in his motivations and what that means for Grab itself. Cool. So that's what we got in the context with Grab. Do they compete with C Limited? Yes, they compete with C Limited to an extent. I'm still doing DD on their competition, but I think at this valuation, Grab is relatively undervalued compared to some of the competition. What's the insider selling look for Grab? I think the insiders have been selling. I don't think it's crazy. It's not like insane levels, but insider selling to me is just not, the biggest of my concerns. I do think there have been some sales at $3-4. But again, they're buying back their stock with $500 million as well. And, insider selling, again, it's just part of the game when you're investing in a company. If you guys listen to the earnings call, which I would suggest people listen to it, I am beyond impressed by the COO, the CFO, and the CEO. Now, maybe I'm impressed by the COO because he's Australian, and I love the Australian accent. But I was in love with the guy just listening to him. I'm like, oh, this guy knows what he's talking about. He's like, hello, mate. It was like, oh, so bad. But like, I loved it. It was great. But in all seriousness, he knew his shit. And he was, dude, this one analyst asked like a 5-paragraph question. Bro didn't even ask her to repeat herself. He like answered it step by step by step. I'm like, how did you remember that she even asked about that? Like, it was quite incredible listening to the management on this call. And it gave me a lot of confidence. And then obviously the CEO, Anthony, is a rock star as well. So I think there's a lot of momentum to just the broader moat around leadership, and hopefully they can continue into the right direction. Okay, so that's what we got with Grab. Are you interested in a company just because of the accent? No, I'm interested in the guy with his accent because it's just like, it makes me excited to listen to that accent. I have a thing with Australian accents, but what he was talking about in the call, it wasn't really the accent as much as what he was talking about. It was important, dude. I really suggest people listen to that Q3 earnings call. I mean, the level of difficulty of some of these questions and how he answered it was pretty incredible. Okay, so that's what we got in the context of Grab. Let's talk about Palantir and then we'll end it out. So what's going on with Palantir? If you guys watch Palantir Weekly, there's some stuff going on with Palantir Weekly or with Palantir's stock-based compensation that's very important to understand. So Arnie found out in the Bank of America report, which I'm going to pull up right now, that Palantir's SARS expense is rather extensive. And no one's talking about this other than Mariana putting it in the Bank of America report. And then Arnie kind of dug it up. So let me pull up the report right here. And the implication to this is that there may be a world in which Palantir misses on EPS next quarter and the stock takes a nasty hit. And if that's the case, that would not be the best, but it might potentially be good for a dip opportunity. So look what Mariana said right here. The potential inclusion of Palantir into the NASDAQ poses a catalyst for price appreciation. Okay, so she's bullish on getting into the QQQ. Separately, the stock price appreciation over 50 accelerates the recognition of a $120 million stock-based compensation expense related to market vesting options, meaning The fact that Palantir stock is above $50 requires the company to recognize a $120 million SBC expense related to employees exercising their SARs. Now, some of those employees might not exercise their SARs, but that doesn't matter because the fact that it's over $50 means that Palantir has to recognize the expense due to accounting laws. Now, she's saying, Mariana, this implies negative fourth quarter GAAP operating income and a muted GAAP net income, meaning they're still going to be profitable, but they're definitely not going to be profitable in the context of like meaningfully growing their EPS because of this $120 million expense. Again, we barely did $140 million of net income last quarter, right? So Mariana thinks that that expense is going to be bad for GAAP net income, and it's going to be a negative operating income, which again, the street is not going to like. Now, why does this matter? Well, a couple reasons. Number one, crowd control says, why would she raise her price target? So I think in the face of this, there's a couple things to this. Number one, I think she's just warning investors of, hey, the stock market is stupid and Palantir could miss on earnings on their EPS because of a market-related expense that they have no control over. Legally, they have to recognize this expense if the stock goes above 50. I'm sure Palantir did not think that they would be above 50 this soon, right? They probably thought this was going to happen in like 2028, 2029. So they thought they had a lot of time before they had to get this expense. But now it looks like they have to get this expense right now. If they have to get this expense right now, I don't care what the reason they give for why they're not as profitable as the street wants them to be. I think Palantir is going down. And the reason Palantir is going down is because we saw this with Robinhood pretty easily. Robinhood missed on a stupid reason, right? It was just like an expectation mismatch behind their contra revenue, which is another fancy accounting thing, and then a regulatory accrual fee on their EPS, 17 cents versus 18 cents. Robinhood goes down 25%. And it's like, wait a second, but this is a dumb reason for it to go down. And so, people bought the dip, I bought the dip, and the dip's been doing well if you bought from those levels. But the street didn't care. The street just saw the headline, the algorithm saw the headlines, and then we got a little bit of a sell-off. Palantir has not had a sell-off in a long time. What could create a sell-off? I think all of us agree what creates a sell-off is missing on earnings. And I don't think Palantir is going to miss on revenue next quarter. I think they're going to surpass 30% in terms of revenue expectations, which maybe could overshadow missing on EPS. But based on this SARS thing, that again, I'm still doing research into it, they might miss on EPS. Meaning, if the street wants 10 cents of EPS and Palantir comes in with 4 cents because they had to recognize this $120 million expense, which lowered operating incomes and then GAAP net income by 6 cents. I'm just throwing out the numbers. That's a miss on the bottom line. And at $150 billion market cap, when you're trading at 60 times price of sales, the street might say you're not allowed to miss on anything. And that could be something that is a catalyst for share depreciation going into Q4. Will that happen? I have no idea. Could that happen? I think that really could happen. And the fact that Mariana mentioned it in her report means that she also thinks that this is something to be aware of. Now, why does she raise the price target? Because I think long-term Mariana doesn't care, right? Like if Palantir goes back to $40 because they missed on some EPS, not because they actually missed, but because of like a stock-based compensation expense, then I think Mariana would advise her clients to buy that dip. Because, I mean, that is a dip that gets eaten up very quickly, in my opinion, because at the end of the day, people have been waiting for Palantir to get a dip. Whatever reason they get the dip for, they're going to probably want more of it. And if there's not a revenue growth problem, if there's like a stupid regulatory reason for why the EPS is down, I'm buying that dip. And I think a lot of people would buy that dip. So I think if that happens, then that's not the worst thing in the world for a lot of people that are buying. And I think we'll see a recovery rather soon, like we saw with Palantir. But that is something that is possible. And if that is possible, then we definitely have to pay attention to it. There's a part of me, though, that also believes, wait a second, Palantir knows about this. Their accounting team knows about this. They know they have to recognize this expense. As soon as it hit above $50, they probably realize they have to recognize this expense. So there's two things to think about from this. If they know about it, the bull argument is they're going to close a lot of deals in Q4 to make sure they're still positive on their operating income. Because, for example, if they have to recognize a $120 million expense, and I think they did $93 million of operating income last quarter, they're going to have to do like $170 million of operating income this quarter, which means either revenue goes up or either margins go up to overcompensate for the fact that that they have this SARS expense. That's the bull case, that they're just going to ramp up the growth to be able to justify it. Palantir EPS estimates went from 9 cents to 11 cents in the last 30 days. Yeah, see, that's not good. That's not good, because if the EPS estimates keep going higher and if we miss against the expectations, that could be bad. That's the bull case. The bear case around Palantir, the company, internally knowing that they have this SARS expense that's going to hurt their profitability, is it could be a reason for why the insiders are selling. We've seen a lot of insider selling from Palantir. I mean, a lot. More than you can imagine, right? Karp selling almost $2 billion worth of shares. I have no problem for that. I believe he should be allowed to do that. And you can sell your shares right now at the same price or even a better price than Karp if you hate that he's selling. But one of the things that it could explain all the selling is that Karp knows that they're going to miss on EPS next quarter because of this SARS expense, which is, again, a byproduct of the stock going to $50. And he's like, shit, it doesn't matter why we miss on EPS. The market's not going to care. They're going to take us down 20%. Let me get out right now at a $66 price or a $67 price before we go back to 45. If we go back to 45. That is one theory I have to explain insider selling, because I can't really explain insider selling outside of the company thinks, or the insiders think, that the stock is egregiously overvalued. Because at this point, they're not selling for taxes, right? They're obviously selling for a much, and that's okay, right? If they're selling for profits, that's totally fine. Bezos, Jensen, they're all doing the same. But something that could accelerate that is if you definitely know Q4 is going to suck to the street, again, not your fault, but because of this like SARS expense you have to do, maybe you sell some shares right now, right? That could be an argument that they're doing. Sachin says, if a sell-off triggers on Palantir, it will be massive as analysts will fuel it, providing a better price for their suits. Yeah, I agree. And I think this could also be a way that retail that has been waiting to buy more Palantir ends up happening if we get this type of a dip. Lunar says, could this be a reason they have the shelf offering for more shares? Yeah, they had a shelf offering of what, 200 million more shares or 250 million more shares a couple months ago. This could be the reason. They have to issue those shares to cover the SARS expense, and they have to recognize the expense on their bottom line, which ultimately hurts net income. So look, I'm just, I'm very bullish Palantir, very long-term bullish Palantir, but these are things that we have to talk about. And now, am I going to make a decision based on the SARS thing? No, I'm not selling any of my Palantir. I'm not going to try to time it. First of all, my average, I'm not going to get my average in the low 20s again, right? So it's like, it's not going back. I don't think, if it is, then I will happily buy that. But if it goes back to 45 or 40, I'm probably buying. Okay. I'm buying at 40 and 45. That is a price I like buying, but I'm not going to sell right now to try to think it goes back to 20, which I don't think is going to happen. So from that perspective, I don't think there's anything you do on this news. It's just something, especially, if you have like a 64 average, maybe you get out because you think it could go back to 40. But if you're below the 30s in your averages, which I know a lot of people are, I think you just sit back and say, all right, if you give me another dip, I'll load up even more. At least that's the argument that I would have on this news. But it is helpful to know that there is something that could take the stock down, and that is explaining why we're seeing this insider selling, which could be a very basic thing, which is that they'll miss on EPS. And look, it's all kumbaya until it's not. And I'm saying this because I experienced it with Robinhood. Robinhood, October 30th, I was like, all right, we're at $29. They're about to crush earnings. We're going into the 30s. And you guys saw my face as we went all the way down to 23. And I was like, that sucks. And it's all kumbaya until it's not. It's all fun and games until it's not. Until the numbers hit the screen and the street says, we don't care why you missed. We're selling off because we don't think you deserve this premium because you missed. It happens. It happens to Tesla. It happened to Robinhood. It happened to NVIDIA. It happens to a bunch of companies. It has not really happened to Palantir since they've been on this run. Maybe this is something that could happen to Palantir. Then again, I am also thinking maybe the company knows about this and they're going to try their hardest to not let this be the biggest miss in the world. But if it is a miss, even by slightly, a couple cents, that could be bad. So we're going to have to see. We're going to have to see kind of how it plays out. But if you are obviously, if your average is $12, I don't think you have to worry too much about it. But there's an argument for why that could happen. Cash flow could offset the SAR expenses, maybe, but they've got to up that free cash flow. They got to really up the free cash flow, right? In Q4. And, Q4, they're guiding for like 30% growth. I think they're going to come in at like 32, 33% growth. Will they actually blow us away at 40% growth? I don't think so. I think 2025, we maybe have that quarter. I don't think Q4 we have that quarter. Maybe we do. But if they grow like crazy, this doesn't matter. If they don't grow like crazy, then yes, this is going to be something the street might end up thinking about. But again, if you're in this thing super low average, you kind of just sit back and chill. And, if Palantir has a great quarter and they miss on EPS and the street still takes it up to 75, 80 bucks, right? Because the street's like, we don't care that you missed on EPS. Just like last quarter, we don't care that you're only growing by 30%. We're going to take you up another 45%, or I think 35% since Q3. That could also happen, right? So if you think, hey, maybe they missed on EPS, but they're showing really good margins, blah, 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 expansion, and the street's excited about that, then it could go higher. I think, and no one knows, but the point is this could be one more data point to consider when understanding kind of what's happening with Palantir right now. Rob, thank you for the $10 super chat. Amit, would you consider hedging your position with puts or covered calls on Palantir for earnings? It's very subjective and it's individualistic. I mean, at this point, I still don't believe covered calls on Palantir are a great idea. I don't think it's a horrible idea because at 65, obviously the valuation's up there. And if someone's willing to pay you a lot of money for a $70 covered call, then, that's not a horrible hedge. But I also don't know if they're going to blow us away with a crazy quarter in Q4, So in general, I like to do covered calls as my hedge versus puts, just because, I'm getting some premium. Worst case, I can roll the covered call. Now I might be having to roll the covered call for a while, but let's say you have a covered call at 70, Palantir goes to 72, and then eventually comes back to 68 and you can kind of navigate it. So I think that's better to me than buying puts because you're kind of just throwing money and hoping it falls. Or if it falls, you make money. If it doesn't fall, you're losing the money. Whereas the covered call, you at least get some upside to it. So I like covered calls more than puts, but still not the most comfortable doing them on Palantir at those levels. So that's what you got right there. Phil says, why wouldn't they just guide down in advance with a clear explanation and give it time to digest? So companies can't really do that. They can guide for general growth expectations. They can't literally say, hey, we're going to guide for, 3 cents or, they kind of can, but with all the analyst estimates, that's why the analysts are so important. That's why these companies have to wine and dine the analysts and take them to fancy dinners and all this shit. And that does happen because the analysts determine everything else. Right. So with Palantir, they could potentially say that we're going to be doing this, we're going to be doing that. But at the end of the day, the analysts have to be smart enough to recognize what's happening with the company. And Mariana, who's a very smart analyst, she understands, this STAR expense could be bad. And she's warning her clients about what could happen. But it's up to Brent Thill and Louis De Palma and Rishi and all these guys and I'm sure they want it to go down because their price targets are significantly lower. They don't believe in this valuation. So they're probably happy if the street messes up the expectations. Louis De Palma literally raised Q2 2023 expectations off of SPAC revenue. Palantir was guiding for 530 million. He said, oh no, they're going to do 550 million because the SPACs. That was bullshit. And he knew that was bullshit, right? Like Palantir had never said, hey, yeah, the SPACs are raking in a ton of money, but he tried to artificially manipulate the expectation. So my point is Palantir could say whatever the hell they want. The analysts ultimately have control over this. And it's going to be a game of, do the analysts care about this EPS SARS thing? Do they not? Because if they do, and they adjust on it, then we're potentially going to see revisions to EPS to the downside. If they don't, and revisions go to the upside and Palantir misses, then obviously that can be bad. The analyst expectations right here, I'm taking a look at it just to make sure. Yeah, they're expecting 11 cents. That is correct. They're expecting 11 cents. Yeah, they're expecting 11 cents. GAAP, they're expecting 5 cents. EPS normalized, they're expecting 11 cents. Also, revenue, they're expecting 776 million, which is actually up over the past 90 days. So revenue expectations have gone up. It's going to be really hard unless the analysts are smart enough to understand the SARS expense, like Mariana, where they would bring their EPS expectations down for Q4. I don't know if that's going to happen. And if that doesn't happen, then, we're going to have to see kind of how the market interprets it in the context of Palantir. All right, let's check some overnight market stocks and see how they're doing. SoFi right here is up about 1%, 1659 currently in the overnight markets. MSTR is at 401, up about 3.4%. Palantir, 6683, that's down. Hood, 3797, that's up about 1%. NVIDIA is at 138.45. They are up 0.41%, whereas Marathon Marathon 2819 up 2.8%. Riot is up 3.4%. Okay, so the Bitcoin miner is getting a little bit of love. Coinbase as well right here. Coinbase at 302, that's up 2%. And then Amazon as well, 208, that's up slightly as well. Thoughts on Nubank? I like Nubank. I like them. I think their growth is really good. I don't have a position yet. I'm looking more at Nubank. Buying them on their growth alone, to me, is not horrible. The growth in Latin America is just absolutely insane. I think the sell-off is an opportunity at $12. I don't have a position, but I like Nubank. I do like Nubank. Jose says, I have $95 covered calls. If it gets close, I'll roll it. Yeah, I mean, look, if it gets closer to $95, you can always roll those covered calls. But 95 is decently out of the money. So it would have to make it would be a good problem for you to have to roll those calls if they do see their way closer to $95. Biden just pardoned Hunter Biden. This came out just now. We talked about it like 40 minutes ago, but this is the official release. A full and unconditional pardon for those offenses against the United States which he has committed or may have committed or taken part in during the period from January 1st, 2014 through December 2024, including but not limited to all offenses charged or prosecuted by Special Counsel David Weiss. He has a full and unconditional pardon. In testimony, I have hereunto signed my name and caused the pardon to be recorded with the Department of Justice. This is by President Joe Biden. All right, there you go. Biden pardoning Biden. Catholic King, thank you for the super chat. I love you, Amit. You and Tom Nash made me a lot of money. Here's a commission of some kind. I appreciate you, brother. Thank you for the super chat. And thank you for being here as well. Appreciate you, man. Thank you for being here. All right, so that's what we got. Last thing we're going to end off the show on, guys, and then I'll see you guys in the morning, is Michael Saylor giving his 3-minute presentation to Microsoft. This is the fastest and I think most effective 3-minute pitch you'll probably ever see on Bitcoin. Here is why Michael Saylor thinks that Microsoft needs to put some Bitcoin on the balance sheet. Here we go.
Microsoft can't afford to miss the next technology wave, and Bitcoin is that wave. Bitcoin represents the greatest digital transformation of the 21st century. It represents digital capital. The global wealth is distributed across assets that provide utility and others that preserve capital. But risk is destroying trillions of dollars of that capital every single year. And investors are turning to digital capital in the form of Bitcoin in order to avoid that risk. Digital capital is economically and technically superior to physical capital, and it represents a revolutionary advance in capital preservation. The asset class itself is growing from trillions to hundreds of trillions of dollars, and it is backed by digital power along with political and economic power. It makes sense for Microsoft to be powered by digital capital. Bitcoin's the best asset you can own. The numbers speak for themselves. It makes a lot more sense to buy Bitcoin than to buy your own stock back or to hold Bitcoin rather than holding bonds. If you're going to outperform, you're going to need Bitcoin. And those bonds are undermining your options market and your equity liquidity. Luckily, you have an alternative. Public support for Bitcoin is surging, as is political support, as is support for the US Bitcoin Strategic Reserve, as is Wall Street support. And the President of the United States says,
never sell your Bitcoin.
That's why we're entering year one of the crypto renaissance. And you have a choice to make. Cling to the past or embrace the future. Divest billions of dollars and slow your growth rate. Invest billions of dollars and accelerate your growth rate. You've surrendered hundreds of billions of dollars of capital over the past 5 years, and you've just amplified the risks that your own shareholders face. If you want to escape that vicious cycle, you're going to need an asset without counterparty risk. What if you could buy a $100 billion company growing faster than Microsoft for 1 times revenue? What if you could keep doing it every single year? It's time for Microsoft to evaluate its Bitcoin strategic options. We've created an open source model. You can plug in your own assumptions. You can convert your cash flows. and your dividends and your buybacks and your debt into Bitcoin. If you do that, you'll add hundreds of dollars to the stock price. You can create trillions of dollars of enterprise value. You can strip away risk from your shareholders, and you can prosper on the Bitcoin standard. So do the right thing for the world and adopt Bitcoin.
Not a bad 3-minute pitch. Not a bad 3-minute pitch, but that's what you got from Michael Saylor on MicroStrategy. And we're going to see if the broader large cap tech companies actually believe in his vision. I mean, if Satya Nadella actually comes out in a couple months and says, yeah, we bought some Bitcoin because Saylor had a really good pitch. Dude, I don't think that's going to happen. But if it does, it would be the most epic thing ever. He has a hell of an argument. I just don't think those companies are ready to take the risk with Bitcoin, but maybe one day they will. And if it is, you know, maybe that is more beneficial, obviously for Bitcoin, but also to those companies long-term. All right, that's it for me. Thank you, everybody. Hopefully you guys had a good Thanksgiving, a good Black Friday. We got Cyber Monday coming up tomorrow. If anyone's doing any shopping, hopefully you guys enjoyed with your family, spent some time with them, got to enjoy. And we got 1 month left. 1 month left of the year, 2025. Let's try to end it out right. S&P closed at an all-time high. November was a strong month for the markets. Small caps did well. Obviously, crypto doing well. 1 month left of 2024. Let's try to end it out. And then we're going to get into 2025, which is wild. But we are almost here towards the end of the year. All right. Thank you, everybody. Julie, RC, Derek, Byron, Cloud, Matt Money in the chat, June, Jake, thank you, everybody, for being here. Barbara got you lined up. Yeah. Shout out to my barber. He got me lined up today. Thank you, everybody. Appreciate you guys. I'll see you guys tomorrow, Monday, 8:45 a.m. Eastern Standard. Do we have any earnings tomorrow? Do we have earnings tomorrow? Zscaler after the close, and then Tuesday, Salesforce after the close, and Marvell. So nothing too crazy tomorrow, but Tuesday we have some more earnings. All right. That's it. Brandon, Bhaskar, Gary, thank you, everybody, for being here. Patrick, I'll see you guys tomorrow on the Market Open. Bye, everyone. Have a good one.